Welcome to Rise Up. This is a special edition. If you're wondering why we're appearing today, it's because we're hosting a very special edition of Rise Up on Wealthion to help you think through what's going on today, the expected tariff announcements tomorrow, April 2nd. And no matter what you're invested in, you will most likely be affected by some of these tariffs. And so our goal today is to help you think this through and know what action to take.
Liberation Day, Terri. It's Liberation Day tomorrow. We're finally free.
Yeah,
So
I like that.
That tagline, unusual, but here we are, here
That's
on April 1st. And I guess on purpose, Peter, he decided he didn't want to make the announcements today, wanted to move them to tomorrow. So.
Well, Joe, I understand he did make an announcement today. He's planning on adding tariffs to Chinese fortune cookies, because when you get the information in fortune cookies, it could be considered fake news. So he's going to heavily tax fortune cookies now. So look out, everyone. This is coming your way.
There's a hoarding going on today.
That's right. And it is April Fool's Day, so you can decide if that's true or not. But there seems to be tariffs. That seems to be the thing for everyone. So, Joe, you're a managing partner, a CFA, the co-host with me. We have also incredible guests with us today.
I'm so excited about who we have today with Ben and Peter, both super brilliant investment minds managing billions and billions of dollars. I think it's great that they're going to talk a little bit about this. Obviously, this has been all the rage for the last month in the markets, last 6 weeks, really. It's become the signature thing other than immigration that the government has been focused on. And tomorrow is D-Day. It's the day. And we've priced in already, just to highlight, a pretty significant amount of tariffs. We've already seen some imposed, especially on auto, 25% taxes on cars. But I think I'd like to highlight on 3 different pillars that we're going to cover over the next little while here. The first one is how the team thinks about the size and scope of the actual tariffs. What do they anticipate will happen? And although none of us can guess, what are the implications of that? Number 2 is the certainty or the permanence of those. Are they a negotiating tactic, or is there certainty around it? And the third is the style and delivery. How much does it matter, the way that the president talks about these? So those 3 things, I think, are going to drive the feelings and the length of whether it's a recovery, whether the market goes straight up or muddles around. But clearly, we've already priced in some level of slowdown. It's already in the markets. And the question is this just a modest decline, or is this extended? Because that's obviously where it really matters to people. Can't do anything about the past, but let's talk a little bit about tomorrow, Terri.
Well, you talked about what are the actual tariffs. I mean, that's a big one. And President Trump right now is saying all nations will face some form of reciprocal tariff, not just the 10 to 15 countries that have the worst trade imbalances. So this is really unclear, but maybe what we should talk about now is just the first one. What are the tariffs that are coming? Peter, do you want to share some perspective on that?
Sure. So specifically with April 2nd, it seems that it's down to 2 possibilities. One is what they call, evening the playing field in terms of the tariffs that they being exporters to us and what we put on them, to hopefully lower theirs relative to ours, rather than having to raise ours to where theirs is. I think the market would actually be very good with that if the aggregate result is a global lowering of tariffs. The other question, though, is what the possibility for the second sort of tariff door may be. And that could be what's being bandied about, and even Peter Navarro, the trade rep, talked about, is a 20% wholesale tariff on all U.S. imports of goods, which would total about $600 billion per year spread out over a particular time frame. If they were to implement that, I think the market would be less happy with that. But the administration's perspective and purpose for that would be to apply that sort of income to paying to extend the expiring tax cuts at the end of the year. So there are actually 2 different tariff lanes that are being debated here, and I think they should be treated differently. And we'll obviously see tomorrow at 4:00 p.m. Eastern which road they choose.
Ben, I'd like to double click on that. I think it's a very interesting idea that this is about evening the playing field, or B, about generating revenue, which B is really a tax, right? Like the way to think about if this is really about just generating revenue, the payers for that are typically the corporate America and the consumers. Like the government is not collecting money from anyone else other than the people who are actually buying the stuff or selling the stuff, which is all of us. So I think that's a very interesting measure, Peter. How do you think about it, Ben? Is that a fair interpretation? And how should we think about it if he leans most on evening the playing field versus most on generating revenue? And how should you interpret that? Because I think it's a very interesting lens.
Yeah, so whenever I'm talking to clients about what tariffs are, I always say that the big positives that people were looking for out of the Trump administration were lower taxes, lower regulations. That was what worked in Trump round one, and that's what people were looking forward to in the fourth quarter of 2024 after the election. And I always point out to folks, the nice thing with a tariff is it's actually a tax and a regulation at the same time, right? It's a tax on individuals, what they're spending, as you just noted. It's also a regulation. It's telling businesses where they should or shouldn't be doing something, and it factors in as a new decision-making process for them, and another thing they'll have to think about. So I think the biggest thing that people are looking for, and all the uncertainty that we're talking about, and I think Peter laid it out really well, you take this step back. People want to know what the logic is, because we've heard it's about the border. We've heard it's about fentanyl. We've heard it's about evening out trade deficits. We've heard it's about funding the deficit. We can speculate what they are, but we actually don't know what they are. And that's what we're going to be looking to find out tomorrow. So yeah, I mean, if it's geared towards leveling the playing field, getting everyone to lower their tariffs globally, putting us on a fair base for competition, I think that would be seen as a positive. If it's being seen as more as a way as punishing other countries, punishing companies, punishing individuals for whatever the reason is, whatever the affront they've done, I think that would be where it'd be more damaging. And I think the last thing which you talked about, and this is really what the market's wrestling with, this whole tariff debate. Most of what we're talking about is, which is a good thing, is reversible. All the things that they can announce, they can turn around 2 weeks later and take it all back. So that's adding to the uncertainty. So that's why the permanence, what is the goal? If the goal is just to improve trade, you know what that tells me? That tells me it's more likely to be a reversible trade, right? We're going to negotiate. We're open for business. We're ready to talk, right? And there's been plenty of quotes to that effect, even over the past weekend. But if it's really like, nope, we want to get rid of trade deficits. We think, we trade too much with Canada. We trade too much with Mexico. That's why we started off with those two countries. Then that's going to be seen as a much more longer term, much more of a challenge for businesses to adapt. And that's what would be seen negatively.
Really interesting insight.
Yeah, so let's talk a little bit about, the likelihood if these tariffs go through, what is the likelihood they'll actually stick, or can we predict on some of these? So, Joe, what are your thoughts?
Well, again, I think Ben has outlined it beautifully. It's not really what happens, it's how we interpret what's going to happen. The market hates uncertainty. So if it is actually just a back and forth so that everyone lowers tariffs, we're trending in a direction like, well, this is as bad as it's going to be because it's going to get better, because either the countries are going to reduce their tariffs to match ours, and it won't matter. It's generally good for business. So it's just for us as investors, for us as business owners, for companies investing in their businesses, the unknowing is the biggest problem. If it's not knowable, you don't know whether you should, like Ford is not going to start manufacturing cars in the United States, because to build a factory, if the Democrats come in 3 years from now or 4 years from now and change the rules, they're going to go back to producing us. So they need to know the likelihood of it sticking. And I think Ben did a great job. Peter, great setup, honestly. How do you think people should be operating as to like how to interpret whether this is going to drag on for months and months without knowing what to do? But to me, the key is what businesses interpret from the rules, because businesses are quick to adapt, but they need to know what they're adapting to. So what should we look for tomorrow to give a read of like, okay, water's blue, we're good, we can jump back in again?
Well, I think we need to hear whether April 2nd is it, whether they've laid out all their sort of tariff cards on the table, and that's what we're going to get. Now, they're going to sell it as something permanent, because if they don't, then businesses aren't going to change their ways in response, and they'll try to wait it out to see if there's a change in Congress in 2026 and so on, because there's also a legal thread that flows through this. The president doesn't have authority to lay on tariffs unless there's a quote unquote national emergency. So it's very possible that whatever we even hear tomorrow is going to end up in the courts at some point, as people sue and say, well, there is no national emergency here. But to your point, Joe, yes, businesses, regardless of what we're going to hear, they just want to know. They just want to know what suppliers they're going to procure their products from, how much it's going to cost them to ship something from point A to point B, and how much of a price increase is their consumer going to be able to adapt to. Now, from an investor standpoint, we do have some experience with this, right? But not to the same extent. 2018, we had a previous tariff battle. It negatively impacted manufacturing that led to Fed rate cuts in 2019. So there is some experience with this. But I think it's important from an investor standpoint is don't look at this in isolation. Look at it as part of a broader picture. Look at it where it's happening in the context of interest rates. Where is it happening in context of how Mag 7 stocks are trading and where international investors are looking? It's part of a broader mosaic that this is going to help fill in tomorrow.
Okay. Hey, Ben, I have a question. Obviously, we want to get into what people should do, but I am curious. Politics is a show, economics is reality. And tomorrow, I think it matters whether we get Donald Trump president and showman or Donald Trump president and rulemaker. So which version do you think you're going to get? And how should we interpret what his delivery style? Because obviously we've seen many versions of how he likes to present things. So what do you expect to see, and how should we interpret each version?
Well, I think it's somewhat ironic. I think the more extravagant and showmanship there is to it, the more we're talking about, other countries are ripping us off, et cetera. We have issues with this country, with that country. I think the more extravagant it gets, that's actually the more positive, because it means there's more room to then come back and have a negotiation, because a negotiation is a great show too, right? Sitting around a boardroom table, I think President Trump knows a thing or two about making that into a show. But so I think the more it's laid out and the more it's said, well, here's how you can fix it, I think that's where the positive lies. So it's a strange way to interpret it, but I think that's where we're headed. Whereas if he just stands up there and shows some charts, a couple numbers and says this is what we're focused on, I think people would actually be a bit more concerned, because nope, they're very hard and set on this. Okay. But I do think the goal is to set up some type of a negotiation, because that way the show continues. Right? You always want to have new episodes, right? It's all about content.
Let's talk about that. The next show. Ben, you're working with clients each and every day. Peter, you're helping investors think through. I mean, there are some clearly risk here. Those businesses that rely heavily on imports, manufacturing, automotive, consumer discretionary sectors. We may think about diversification into defensive stocks like utilities, healthcare, consumer staples may be more resilient. But are your clients panicking, and what are you telling them to do?
So I wouldn't say our clients are panicking. I think most of the calls that we have are just people who are concerned, and it's the nature of politics, which you led off with. It creates a lot of really big headlines. It's all over the news, and it's human nature. You see a story like that, anything geopolitical, people see it and they want to do something. They feel like they need to do something. It's a human need, right? You see something going on, I have to take action. We're hardwired. We've been doing this for millennia. But the important thing is you need to have a pre-existing plan. If we've only had a 10% pullback from the peak in the equity markets, we've only had a little bit of volatility here. If this type of movement is causing an issue with your portfolio, there's probably something wrong with your portfolio. Maybe your portfolio is fine, but it's not the right portfolio for you, or you need to think about, where you are positioned, because we're always saying, when clients are in a period of emotional distress, that's not when we want to make decisions on a portfolio. That's when mistakes get made. That's when people go off their path, right? So it's important to have a sense of where you are and what you want to be positioned for. and then be in a position so that you don't have to think about these short-term movements, these short-term issues. So if you have expenses coming up, you should have your 3 to 6 months of expenses in cash. Little things like that. And again, these are really basic bits of advice, and it's kind of boring, but we like being boring. We're happy being boring.
Peter, what do you think should people do? What should they be doing during tomorrow, after tomorrow? Is it do nothing, or what would you suggest here?
Well, I want to say do nothing because we don't want to invest our politics. But, Joe, you made a great point before that there's politics, but then there's real substance. Markets are very unemotional. They look at what will directly impact economic growth and earnings. How many more phones or less phones is Apple going to sell in response to a particular policy? And there's no doubt that tariffs will have a direct impact on economic activity. So I think it's smart for investors to sort of not be overly positioned or concentrated in what used to work, because the market's changing right now. The Mag 7 trade is no longer the dominant driver of markets. And I think that is a multi-year trend. So if you're using that sort of playbook, thinking that everything's going to be fine, we'll get through this like that, I think that is not necessarily going to work. But having international stocks, having value stocks, and that's the one thing about a value stock relative to a growth stock. A value stock inherently has lower embedded expectations. So whatever externalities come our way, owning a value stock, well, that stock has already priced in a lot of negative news relative to a growthy high multiple stock that is more vulnerable to external shocks. But I do want investors to understand that not everything stays the same. There's not always this linear path. Markets go through transitions. Markets go through times of consolidation. And I think we may be in the midst of one of those time frames.
And I'll highlight, like, where our PE multiple today on the S&P 500 is 20 times. And even on the equal weighted, which recalibrates and reduces MAGA's impact, it's 16 times. Now, those are frothy levels. And so uncertainty causes the market to say, we've got to come down. And so we were at 23 times, we're now at 20, so it's more reasonable. We're still on the high end of pricing. And as I think both Peter and Ben have pointed out, don't do anything rash. Emotions aren't good for your health. But think about the fact that the playbook going forward might need to be different. Like, I remember 99 and 2000, when there was the bursting of the Nifty 50 trade, all the big tech-heavy companies, which today are represented in large part by what's happening with AI, and that bubble pulling out. But value stocks did fine in that time. International stocks did fine in that time. So again, I think we're going through an existential crisis, and obviously work with an advisor to make sure that you make prudent, calm, deliberate choices, because this shift is a multi-year shift. It's not just a few months, and no decision should be made overnight. I should move to cash right now or sell all my Mag 7 stocks. Like, we need to have thoughtful, careful consideration for these changes that might have an impact of years. So I think it'll be an interesting, we'll all be on bated breath. We have already priced in a lot of chaos, but I haven't seen what I typically like to see at the end, which is an oh gosh day, a VIX sitting in the mid 30s. We have not seen that yet. So I would not be surprised if we get a lot of noise in the next rest of this week as we stabilize. So you guys were great as always.
Yeah, thank you both very much, both Ben and Peter and Joe. Today was really a special edition to give you some information for you to be able to understand what's happening over the next couple of days. But we will be here again later this week with our regular show. So I'd invite you again to tune in now after the tariffs go into place on April 2nd to determine what are the next steps. So thank you for watching our very special report. These are uncertain times. The one thing that is common, we continually tell our viewers, is go see your advisor, see a fiduciary, understand your portfolio. And if you're not sure, go to wealthion.com/free to get a free portfolio review, and we can help you work through this. Thank you so much for watching.
Thanks, team.
Thank you.
All right. Thank you very much.